Good evening. My name is Ansley Booker. I'm with the Office of Non-Traditional and Evening Services here at the Mercer University Henry County campus. Today is week 2, and we're going to start with dealing with debt. And again, this is presented by the ONES program in Henry County. So signs of debt stress include using payday loans, being over the limit on one or more of your credit cards, delaying medical and dental visits because you don't have enough cash to pay for them. So again, if you don't think that you're dealing with debt, think about these as debt if you're in distress. So if you use any one of these items to pay off any debt that you may have, you may be in debt distress. Continue with signs of debt distress are using credit card advances to pay for living expenses. So if you're using your credit cards to pay for your rent, pay for food, pay off your mortgage or any types of car loans that you may have, you may be dealing with debt stress. If you're using the overdraft protection on your bank accounts to pay for your monthly bills. And lastly, if you're using savings to pay for bills, then again, you're in debt stress. You always want to make sure that you're managing your debt by paying from your accounts, your active accounts, and not necessarily your savings accounts. Again, another thing is signs of debt stress includes using one card to pay for another. So if you have multiple credit cards, but instead of paying the balance off each month, you actually utilize another card to pay for it, then again, you could be in a sign of debt stress. Delaying one bill or floating to pay another overdue bill. So if you know that one bill is due on the 1st, and maybe you float that one over, pay that one first, and then float another one over to the 6th, again, that could be a sign of debt stress. And then lastly, paying on the minimum due on your charge accounts. Again, you want to make sure that you're actually paying not just the monthly amount due, but a little bit over so that you're not paying a lot of interest on your credit cards. Next, in order to deal with debt stress, you want to kind of prioritize your repayments. You want to look at the one that has the highest balance, the highest interest rate, and as well as the lowest balance. Again, you want to ask yourself, how much interest will you pay over that time? And then you want to use this information to help you prioritize your debt repayment. Next, you want to use power payments as you pay off one debt. Use the money toward your next priority. So again, just prioritizing which debt is most important based on which has the highest balance, and then again, which has the highest interest rate, and then paying those off step by step. Okay. Again, you have available resources like your financial aid office on campus. So if you're not sure about your loan debt as well as managing some of your other debt options in your life, you can check with the financial aid office as well as multiple community resources. One option that is available to you is the Money Management International as well as the Consumer Credit Counseling Service. Again, these agencies make up the largest nonprofit full-service credit counseling agencies in the United States. And below you can actually see the link for moneymanagement.org. If you just do a quick Google search, you can find the office that is nearest you in your area. And again, you also want to, in order to look at debt, you want to avoid the quick fix. So don't utilize things such as pawn shop, the payday loans where you borrow a loan a very high interest rate and you have to pay those off by your payday. Title loans where you may use the title for your car to borrow money and need it for a quick emergency, and then the tax refund anticipation loans. So don't look at your tax refund as a way to help float your payments, but look at that as an extra income coming in. So again, you want to avoid all of these quick fixes. And you're worth it. Learn from past mistakes. Everyone know that financing is a learning curve. But again, learn from your past mistakes. Don't continue to repeat the same mistake over and over each month again. Commit to being debt-free. Being debt-free is a lifestyle, and you must invest in that lifestyle in order to maintain it for the rest of your life. And again, spend less and save more. I know this is very hard to do, but if you look at your budget and you spend less and you save more, that bank account will accrue over time really, really fast. We've just finished our series on debt. Now I'd like to focus on credit. And again, this presentation is entitled Everything You Need to Know About Credit. And again, it's presented by the Office of Non-Traditional and Evening Services. So I want to talk about myths about credit first. Myth number 1, I'll pay it off when I get a job, raise, or whatever. The true fact is that Americans are loaded with credit card debt. According to one study, the average credit card holder rolls over approximately $3,900 in debt per month just by using credit cards. Myth number 2, my minimum payments will soon pay off my debt. Obviously, that's not true. The fact is, if you just pay the minimum due on your credit card bills, you will barely cover the interest you owe, to say nothing of the principal. So again, if you do have credit card debt, what you would like to do is pay more than the minimum payment each month. Okay? Myth number 3, I'll only use my credit card for emergencies. Fact. Credit cards are rarely only used in actual emergencies. More often than not, the first credit card is used for non-emergency items. And due to the ease of use, it is easy to run up a debt and or more credit cards. So again, sometimes people have multiple credit cards and will actually not use them in case of emergencies, but usually for day-to-day spending in order to meet their necessities. Myth 4, but I've got this really low interest rate. Actual fact is, credit card companies often lure customers in with low interest rates as an introductory rate, and often after 3 months the rate goes up. So what we want to do is always make sure that you're actually looking at your interest rate on your credit cards and checking that statement balance monthly, again with of course paying more than your minimum amount due each month to make sure that you're actually covering the interest as well as the principal from month to month. Myth number 5, I know I'll always be able to pay off the entire balance each month. True fact. Credit card companies prefer customers who do not pay off their balances each month, so they can often reward customers by increasing their credit limits. So again, they will increase your credit limits, but with an increased credit limit, often you are encouraged to spend more and therefore keep yourself in debt. So be mindful of that when you do get an increase in your credit limit. Again, there are many advantages to credit. Buy now, pay later, so you can actually use your credit card to pay for something in the case of a day purchase, and then you can pay it off later. You can also use your credit cards to purchase things online, and you don't have to carry large amounts of cash in your wallet. You can have your actual credit card and or debit card. And you can also use your credit cards to establish a good credit history. And everyone knows that having a good credit score can lead to things such as purchasing a new home, as well as maybe even purchasing an automobile. There are some disadvantages to credit. You tend to spend more than if you use cash because you're able to ease of swiping that card. Again, items purchased actually cost more if you can't pay off the balance each month because again, that credit card comes with that interest. So if you're purchasing an item, by the time you get the statement at the end of the month, that item that you may have purchased for $2 may intend, based on your interest rate, cost you upwards to $5. Again, debt hinders you from saving and investing. If you have a lot of credit card debt, you won't be able to save as much each month or even invest more. And again, it can also establish a poor credit history. So if you do have a large debt to credit ratio, that can end you up with a poor credit history. So again, who reports to whom? So the top of my illustration here, you have FICO, and then you have the credit reporting agency as well as the lender. And this is a revolving circle here in terms of looking at your credit history. Okay, and it says what counts in your FICO score. If you look at the little pie diagram here, you can see that there's 5 different sections that account for your FICO score. You have on-time payments, which is the majority of your payments, the payment scale here. Capacity used, the amount of credit you've actually used versus your limit. The length of the history, so that the longevity of the card, so if you've had this card 3 years versus 5 years. Then new credit, if it's a new credit and how long it has been established. And then the types of credit that you have. All go into looking at your FICO score. So here's a quick credit IQ quiz. Okay, number 1, placing utilities in your name is a great way to build credit. Missing one payment will not impact your credit score, and using debit card wisely will help establish your good credit. Okay, and number 4, all credit cards are equal. Okay, a credit card comes with a credit limit. You may pay the full amount anytime. There are only 2 credit reporting agencies. And FICO stands for the Federal Insurance Corporation. Number 9, people spend more money when they use credit. Everyone is entitled to as much credit as they want. Your car insurance rate is tied to your FICO score. Having no credit history is a way to go. Okay, so now let's look at all the different scenarios that I posed to you earlier. 1, placing utilities in your name is a great way to establish credit or build credit. That is actually false. Most utility companies do not report your payment information. So don't think by placing your utilities, such as your gas, light, or water bills in your name, that that's going to help establish credit because, again, those utility companies may not report your payment information. Number 2, missing one payment will not impact your credit score. Again, that is false. Even one late payment may be indicated on your credit report. Number 3, using a debit card wisely will help establish a good credit score. That's actually false. A debit card withdraws money from your checking account and does not impact your credit, even though the card may have a MC or Visa a MasterCard or Visa logo. Number 4, all credit cards are created equal. False. Again, you want to check the fine print, terms, and rates, as well as interest rates on those. Number 5, a credit card comes with a credit limit. Again, here, this is true. A credit card does come with the limits that are determined largely by your FICO score. Number 6, you may pay the full amount anytime. True, if you do not pay the full amount each month, you will incur fees. So again, it's best to pay the full amount, if not more than a minimum amount each month. Number 7, there are only 2 credit reporting agencies. Again, that is false. There are actually 3 major credit reporting agencies. You have Experian, TransUnion, and Equifax. Number 8, FICO stands for the Federal Insurance Corporation. False. It stands for the Fair Isaac Corporation. Number 9, people spend more money when they use credit. This is true. Research indicates that credit card users make larger purchases with credit than they do with cash. Number 10, everyone is entitled to as much credit as they want. Again, this is false. The ability to repay is the deciding factor on how much credit you are able to establish. Number 11, your car insurance rate is tied to your FICO score. True, insurance companies consider a low FICO score to be indicative of poor driving. Number 12, having no credit history is a way to go. False. Before you can make a major purchase, such as a car or a house, you must have a credit history. And again, there are warning signs to having credit. So what you want to do is use one credit card to pay another. That's a sheer warning sign there. Paying only the minimum amount due, having your limit lowered by the credit card company, you don't want to do that. And then being unsure how much you owe. You always want to be abreast of the actual amount that you owe on your credit card. And you never want to ask the company to lower your limit. You actually, if anything, you want to allow them to do a credit increase. And then of course you want to always pay more than your minimum amount each month. And again, never use one credit card to pay another. Those are sheer warning signs. So now that you know about credit and the basis of credit, how it's computed, and how to avoid warning signs, we're now going to look at how to review your credit. Okay? So again, review your credit load. Look at how many credit cards you have, look at their interest rates, as well as the amount that you owe. Okay? You want to set a realistic goal for paying off your credit cards. Ask yourself, how long will it take to pay off my credit card? And you can actually use that link below to calculate your credit card. And then there's also another article here that's listed, Cash Course article, and that's going to teach you how to pay your balance monthly. Again, you always want to set up a savings account. You want to consider paying cash or going without, because most times, again, research shows that if you have a credit card, you tend to make larger purchases. So if you're going to try to save more and spend less, try using cash versus credit. And lastly, always request a copy of your credit report. You can do that by going to any of the 3 reporting agencies that I mentioned earlier, TransUnion, Equifax, to get those as well. Okay? Again, check your credit report. Everyone is eligible to receive one free credit report from each of the 3 reporting agencies. Again, that's Experian, Equifax, and TransUnion. So you can go to Experian.com, Equifax.com, or even TransUnion.com. And then lastly, you can get your annual credit report from www.annualcreditreport.com for free. And again, definitely check that each year because you are entitled to one per year. Lastly, this is the contact information on how to get in contact with me if you would like to talk about loan consolidation, credit relief, and or debt relief as it relates to your stay here at Mercer University. I hope that you have enjoyed this presentation. Thank you so very much.